Welcome back, traders. Today we're going to touch on this capitulation that we're seeing in Tesla stock, and we're also going to touch on the brand new Substack that we just launched today. Let's dive in and let's begin with the S&P 500. So here is what we are seeing. We had a pretty big downdraft in the market, right? Lasted about maybe 4 or 5 trading sessions. We're below all of these key moving averages, so that is bad. But we are holding above this monthly value area low of 3826.25, and that level and really this long lower wick over here, these two pivots, these are the gatekeepers that will eventually lead us down to about 3699.75 if they do indeed end up breaking. But let's take a look under the hood here, and we can see from our Finviz heat map that the market was able to hold up decently well, even though we had Tesla, which really slipped into the abyss, down 11.41%, and we also had Nvidia down 7.13%. So it does appear that these active equity fund managers, they're pretty much getting knocked out of all their tech exposure right at the end of the year. The NASDAQ finished down 1.41%, which is certainly not good, right? We got volatility bid across the board. Our trend model's at a -1. Bonds were also pretty weak, which is bad. But if we actually look, remember this, we've got record short interest in the NASDAQ. And remember, 10 years is certainly a long time. And we've got a 10-year high in this short interest. If we flip over to the NASDAQ, we can see that the NASDAQ is still holding on for dear life. So I find that pretty interesting. Despite this Tesla complete capitulation, despite Nvidia, we held on to the low from a couple days ago. I would be watching the NASDAQ because let's say we undercut this low tomorrow, but then we finish out above that pivot level. That could present you with a really nice tight reward to risk entry point in the NASDAQ. If tomorrow we just end up breaking below and we hold below, then of course there's no entry there, right? Then it's really just downside continuation, and certainly this could get a lot worse. The Russell 2000 still looks pretty bad, but also same deal. We're not making new lows just yet. Doesn't mean we're not going to make new lows. Our trend model is still at a -1, but hey, could be worse, could be worse. Now let's take a look at Tesla. This stock is honestly just the perfect storm. We had weakness due to the the Twitter transaction, Elon Musk's antics on Twitter thereafter. Then we had just general weakness in growth stocks into the end of the year. And then we also have now weakness in the auto manufacturers. And then I think you combine that with the fact that Tesla is and was one of the most widely owned stocks in the market. And it's just a recipe for disaster. And of course, these things, they can only be known with 2020 hindsight. But this is certainly the first time I've ever seen one of the largest mega cap tech stocks in the world get cut by over 50% in just 2 months' time. That is pretty bonkers stuff. We also saw Nvidia, which was weakened as well. Nvidia is doing something similar. It's down 7.14% today. So it does appear that perhaps some technology fund managers getting blown out, and yeah, it's just leading to some adverse events in these stocks. So it really just shows the end of the year, a lot of times, is a very quiet period in the market. And this has been such a bad year that we're not even managing to get any peace and quiet into the end of the year. The solar energy stocks are also slipping into the abyss, right? We've got that group. The biotech group, maybe not quite as bad, but look at that, also spilling over into the abyss right below that monthly value area low. And semiconductors as a group as well. Of course, we just went over Nvidia. Semiconductors looking pretty bad as well. So there's a lot of the more growthy, risk on, maybe not even speculative. I mean, semiconductors aren't even speculative, but really just technology focused areas in the market. They are obviously getting hit, including this ARK Innovation ETF, which being heavily long Tesla is really just breaking the dam. Now, what's also not the best look into the end of the year is that our treasuries are breaking down. So this makes sense. You got a treasury breakdown, and the NASDAQ is pretty weak as well. And it just goes to show we're in this bear market. The liquidity picture is continually getting worse because that balance sheet of the Federal Reserve is rolling off. And you really have to be conscious. You got to pick your spots and you got to follow a process. And that's really what our trend model allows us to do, not be too crazy invested in the market when we're in a negatively trending situation. Now, there was a bright spot in the market. We are currently long Crocs, and this name just looks fantastic. This one, nice breakout above value. It is not a super exciting company. It's a shoe manufacturer, and this one looks really good. This is approaching our target level, so I'll probably take a piece of this off into tomorrow's session if we end up with some strength here. Some names that we are focusing on into tomorrow. I noticed a lot of these industrial stocks are pretty strong, including GFF. We have continued strength in the Chinese internet names. This KWEB ETF is looking very solid. We got the pullback to the 20-day SMA, and we reconfirmed that strength today. One name that looks very solid heading into tomorrow is MLCO. Look at this one. Nice high tight flag setting up. Another name that looks interesting. We've got Box that is just flagging out sideways. Perhaps this 20-day simple moving average catches up to price. And then, oh, I can't even forget Four. This is a name that we've been watching for quite a while. Four just continues to creep up to this pivot high. We did spin up a Substack, and basically everyone that is already a Pristine Capital member, you're going to be grandfathered into the Substack, even the paid version. And this is really just going to be a much better version of our end of day emails. If you're not a member, you're going to be able to receive a free version of the end of day email, and it's just not going to have a lot of the same stuff that a paid member would get. But yeah, this is the first edition. I just kind of did a rough draft, and we pretty much hit on a lot of the same topics that we just discussed in this recap. You can see for paid members, a full edition of the trend model, more analysis, what's going on with the sectors, focus list names. So there's just a lot here. I really appreciate everyone that has been tuning into these recap videos, but I think what we're going to end up doing is transitioning. Instead of doing a daily recap video, we're going to be doing these daily Substack market updates. It's going to have all the same info, will be very easy for you to consume. And then for the YouTube channel, we're going to be taking a bit of a different direction. Rather than a daily upload in the same format every day, kind of had me feeling a little bit constricted in terms of what I could and couldn't do. There were some other cool videos that I wanted to experiment with. Basically, the goal is we're going to be doing hopefully one video a week and make it on either like a trading topic, a tutorial, sharing knowledge, looking at trading software and seeing which is the best software, things of that nature. Maybe topical events going on in the market. We'll do specific videos for those topical events. So definitely leave a comment on the video if you have any feedback for which direction you would like to see the channel go into. With that being said, that about does it for today's market recap video. And of course, we'll see you all next time.